Okay, so this next video lecture is still the continuation of our module 6. So this is the annual income tax return for our partnerships and corporations. So we are now in the documentary requirements. So for the documentary requirements for corporations and partnerships, we have the following. First is certificate of income payment, which is not subject to withholding tax, or BIR form 2304 if that is applicable. So we are familiar with this already. We presented this form in the individual income taxpayers before. Second is the certificate of creditable tax withheld at source, or BIR form 2307 if applicable also. So you are familiar with this as well. Number 3 is duly approved tax debit memo if that is applicable. 4, proof of foreign tax credits if applicable also. Fifth, income tax return previously filed and proof of payment if the return is amended, okay, for the same taxable year. Number 6, account information form or the certificate of the independent CPA with audited FS if their gross annual sales, earnings, receipts, or output exceeds 3 million. Number 7, proof of prior year's excess tax credit if that is applicable, meaning if they are availing of tax credits. Okay, for the account information form for our corporation and partnership, so this is BIR form 1702 AIF. So this will be for corporation and partnerships. So we have here the note that in our Tax Reform Acceleration and Inclusion or TRAIN law or act, it amends the section 232 of the tax code in relation to revenue memorandum circular number 6 in 2001, where the corporations, companies, or persons whose gross annual sales, earnings, receipts, or output exceeds 3 million may not accomplish this form. So in lieu of this, they may file their annual income tax returns accompanied by balance sheet, profit and loss statement, schedule of listing of their income producing properties, and corresponding income therefrom, and other relevant statements which are duly certified by an independent CPA. So please take note of that. For the procedures, the entity or the corporation or the partnership should accomplish BIR form 1702 IAF in 3 copies, and they will attach this with their BIR form 1702. For the deadline, so this is the same with the BIR form 1702, which will be on or before April 15th, okay, of the following taxable year. Okay, so this is what our account information form for partnership and corporation looks like. 1702 AIF. So we have here details needed for the background information, just like in our BIR form 1702. Okay. Exempt and taxable income will be included or filled in. Okay, so I think this is balance sheet. Okay, this one is balance sheet. Okay. Okay, schedule of cost of goods manufactured and sold is in schedule 2. Okay. They also have here schedule of income producing properties, schedule of taxes and licenses, payments of beneficiaries, other income, analysis of changes in the retained earnings in case of corporation. Okay, analysis of changes in partnership equity. Okay, so this is how our account information look like. Okay, so this is an additional attachment to their BIR form 1702. Okay, for the procedures, actually we have the same procedure as in the individual taxpayers. So if the corporation or partnership is an EFPS filer, so they will be filling up the applicable fields in the BIR form 1702. They will pay electronically and submit, okay, in the portal and receive payment confirmation from EFPS authorized agent banks for successful e-filing and e-payment. If the entity is a non-filer or non-EFPS filer, so they will be filling in the BIR Form 1702 in the downloaded electronic BIR forms package. They will print it and proceed to the nearest authorized agent bank to pay. Okay, in places where there are no authorized agent bank, they may proceed to the revenue collection officer or duly authorized city or municipal treasurer to pay their taxes. And they will receive the copy of the duly stamped validated form from the teller of the authorized agent bank, revenue collection officer, or duly authorized city or municipal treasurer to signify that they have filed and paid their taxes appropriately. If the entity is manual filer, so they will fill up the BIR Form 1702 in 3 copies. They will proceed to the Revenue District Office where they are registered, and they receive their copy duly stamped and validated from the RDO or Tax Filing Center representative to serve as a proof that they have filed and paid for their income tax. For the deadline, again, so this is on or before April 15th, following the close of the taxpayer's taxable year. Okay, so this other sections right here is just the other details for the tax on corporations. Okay, so we have here tax rates, except as otherwise provided. Income tax rate of 25% is effective on July 1, 2020. Before it was 30%. Okay. So this is under the train law. Provided that the corporations with net taxable income not exceeding 5 million and with their total assets also will not exceed 100 million pesos, excluding their land on which the particular business entity's office, plant, or equipment are situated, they shall be taxed at 20%. So in the case of corporations adopting the fiscal year accounting period, meaning they do not actually start from January, any month and 12 months thereafter. So the taxable income shall be computed without regard of the specific date when this sales or purchase and other transactions occur. So their income tax and expense for that fiscal year shall be deemed to have been earned and spent equally for each month during the period. Okay, so for the corporation's income tax rate shall be applied on the amount computed. This will be multiplied to the number of months covered by the new rate within the fiscal year by the taxable income of the corporation for the period and divide it by 12. So that's how for income tax due will be determined for those entity who are using fiscal year, meaning they do not start on the month of January. Okay. For proprietary educational institutions and hospitals, so how do we tax them? So for proprietary educational institution and hospitals which are non-profit, they shall pay a tax of 10% on their taxable income except those covered by Section D. Provided that beginning July 1, 2020 until June 30, 2023, the tax rate herein imposed shall be 1% only. And then provided further, if their gross income from unrelated trade or business, meaning for example, they have the canteen who are also earning income. So canteen is not actually the main activity of a school. Then in this case, their income from that, if that income exceeds 50% of the total gross income. For example, their income from canteen is 60% of their total income, then or the hospitals, for example, then they shall be imposed on the entire taxable income. So meaning all of their taxable income are now, or their income is taxable. Okay. For purposes of this subsection, the term unrelated trade or business or activity means any trade or business or other activity the conduct of which is not substantially related to the exercise or performance of such educational institution or hospital. So in that case, an example is the canteen. Okay. So proprietary means private hospital or any private school maintained and administered by private individuals or groups with an issued permit from a DepEd or CHED or TESDA. Okay. Now, in the case of government-owned or controlled corporations, agencies, or instrumentalities, so this is our GOCCs, the provision of existing special or general laws to the contrary notwithstanding, all corporations, agencies, or instrumentalities owned or controlled by the government, except, of course, for our GSIS, SSS, and HDMF, as well as PhilHealth, and the local water district shall pay, except for them, they will pay such rate of tax upon their taxable income as are imposed upon the corporations, or 20% in this case. Okay. Next is rates on tax on certain passive income. So for interest and deposits, that's 20%. Okay. If the interest income is derived by a domestic corporation from a depository bank, so the interest will be charged of 15%. For capital gains from sale of shares of stock not traded in the stock exchange, so that has a final tax rate of 15%. For tax on income derived under expanded foreign currency deposit, so this will be taxed for 10%. Okay, for intercorporate dividends, dividends received by a domestic corporation shall not be subject to tax. Okay, but the domestic corporation holds directly at least 20% of the outstanding shares of the foreign corporation, has the shareholdings of a minimum of 2 years at the time of the dividend was distributed. For capital gains realized from the sale, exchange, or disposal of land or building, there is a final tax of 6%, okay, on the gain to have been realized from the sale. Minimum corporate income tax on domestic corporation. So this is MCIT in the BIR form earlier. So it is a 2% of the gross income at the end. Meaning, in this case, the corporation or partnership may choose either the regular tax of 30 or 20% or 2%. 2% is based on gross income, while 20% regular tax rate is based on net taxable income. Please take note of that. Okay. Carry forward of excess minimum tax. So any excess of the minimum corporate income tax over the normal tax as computed, okay, shall be carried forward and can be credited against the income tax for the 3 immediately succeeding taxable year. Meaning, if the computation, or meaning in this case, there is excess tax, or wait, any excess of the minimum corporate income tax over the normal income tax, or MCIT, the MCIT of 2% is more than the normal tax of 20%. So this shall be carried forward and can be credited, and this credit can be up to 3 succeeding taxable years. Okay, meaning they can be used it as a deduction from their tax due. Next, relief from minimum corporate income tax rate under certain conditions. So here, our Secretary of Finance authorized to suspend the imposition of MCIT on tax on any corporation which suffers losses. Okay, gross income defined, of course, these are for shall mean gross sales less sales return, discounts and allowance, and cost of goods sold. We all know that cost of goods sold are included as business expenses which are directly incurred to produce the merchandise to bring them to their present condition. We also have cost of goods manufactured and sold in the case of a manufacturing corporation. So gross income earlier, as mentioned, this is gross receipts less sales returns and allowances, discounts, and cost of services. In the case of service type, we use cost of services. Okay. For the rates of income tax on foreign corporation, so in general, 25%. Okay. Effective July 1, 2020. For MCIT, this is for the resident foreign corporation. So they will have also minimum rate of 2% of their gross income. But effective July 1, 2020 until June 30, 2023, the rate shall be 1% only. For international carrier, so they should be doing business in the Philippines. They will pay 2.5% on its gross Philippine billings. International air carrier in this case, gross Philippine billings means the total amount of gross revenue derived from carriage of person, excess baggage, cargo, and mail originating from the Philippines, okay, in a continuous and uninterrupted flight, irrespective of the place. Meaning the origin is from the Philippines to other countries. Okay. In exchange or endorsed to another international airline, form part of the gross billing also if the passenger boards in a plane or in a port in the Philippines. Okay. International shipping or gross billing or gross Philippine billings in this case means gross revenue whether for passenger, cargo, or mail originating also from the Philippines to the other countries regardless of the place. Okay. Tax on branch profit remittances. So any profit remitted by a branch to its head office shall be subject to 15%. Regional or area headquarters and regional operating headquarters of a multinational company. So in this case, if regional or area headquarters defined in section 22, probably these are subject to exempt companies. So they will not be subject to income tax. Regional operating headquarters as defined or those will be charged with taxes shall pay 10% of their taxable income. So this is effective January 1, 2022. Tax on certain income received by a resident foreign corporation for their interest from deposits and yield or any other monetary benefit from deposit, substitute, trust funds, and similar arrangements. They will be taxed for 20% of interest, provided that the interest income derived by a resident foreign corporation from a depository bank shall be subject to a final income tax of 15% also. Income derived under the expanded foreign currency deposit, so it will be 10%. Capital gains from sale of shares which are not traded in stock exchange, it will be charged of a final tax of 15%. Incorporated or intercorporate dividends, okay, meaning these dividends received by a resident foreign corporation from a domestic corporation, they will be liable to tax under the code. Okay, and for offshore gaming licenses, so here the provision of existing special or general laws to contrary notwithstanding non-gaming revenues derived within the Philippines of a foreign-based offshore gaming licenses as defined in the Philippine Amusement and Gaming Corporation or any special economic zone authority or tourism zone shall be subject to an income tax equivalent to 25% of their taxable income. Tax on non-resident foreign corporation. In general, they will be taxed 25%. For non-resident cinematographic film owner, lessor, or distributor, so they will be taxed for 25%. Non-resident owner or lessor of vessels chartered by Philippine nationals, so here they will be taxed 4.5% of their gross rental. For non-resident owner or lessor of aircraft, machineries, and other equipment, they will be taxed 7.5% of their gross rental fees. Tax on certain income received by a non-resident foreign corporation for the interest on foreign loans, so they will be taxed for 20%. Inter-corporate dividends, so the final withholding tax of 15% is imposed. Okay, and then in this case, subject to the condition that the country in which the non-resident foreign corporation is domiciled or their home or their main office is located shall allow a credit against the tax due from the non-resident foreign corporation tax deemed to have been paid in the Philippines, which is equivalent to 15%, which represents also the difference between the regular income tax and 15% on their dividends. Capital gains from sale of shares not traded in stock exchange, so that's also 15%. Okay, we have here Section 29 was repealed. Okay, so Section 30, exemption from tax on corporation. So we have here the following organization shall not be taxed under this title in respect to their income received. Okay, so labor, agricultural or horticultural organization not organized principally for profit, not for profit, they are exempted. Letter B, manual saving bank, not having a capital stock represented by shares. Okay. Letter C, beneficiary, society, order, or association operating for exclusive benefit of the members, meaning cooperatives. Okay. So they are also exempted. Letter D, cemetery company owned and operated exclusively for the benefit of of their members. So it's like a cooperative as well. Non-stock corporation or association organized and operated exclusively for religion, charitable, scientific, athletic, or cultural purposes, or for rehabilitation of veterans, no part of its net income or asset shall belong to or inure to the benefit of any member. Okay. Letter F, business league, chamber of commerce, or board of trade, not organized for profit as well. They are also exempted. Letter G, civic league or organization not organized also for profit, which are operated exclusively for the promotion of social welfare. They are also exempted. Letter H, non-stock and non-profit educational institution, government educational institution, just like our school. Okay. Farmers or other mutual typhoon or fire insurance company, okay, who are purely local in character for the purpose of meeting their expenses. Farmers, fruit growers, or like associations organized and operated as a sales agent for the purpose of marketing the products of its members and turning back to them the proceeds of sales less necessary expenses on the basis of quantity of their produced finished by them. So those are the corporations and partnerships who are exempted from taxes.